So Dino says, when you're following a stop loss, how far should you move it, i.e. in the 8 EMA bounce? So
basically, if there's a big move going your way, how far should you move it so that if it goes back up, you don't get stopped out?
So
a lot.
it all depends on the system that you set. So okay, presentation doesn't really matter, but okay, let's start again. So with the trading competition that I issued last month, I put in somewhere in here the template. Now, whatever that template looks like, whether it looks like this or not, you will have the basic setups of your system. So the setup, the entry, the stop, exit, how to trail it, blah, blah, blah. I mean, this is just a very quick example of what a strategy should look like. Part of this is how you trail it. So if it's the 8 and 21 EMA, one of the things that, let's say you're doing it as I've done in the course, it will be trail the 8 EMA in a certain way, or if you're trailing the stock, trail it via the 21 EMA. So if we were to add in indicator, sorry, EMA. Say you're doing the 8 EMA bounce and trail, and let's say, let's just do it there. I'm just trying to get an example of a trade. So let's do a short, somewhere on here. And your system says you're going to put your stop loss outside of the 21 EMA, and let's say you're just going to trail it. So ignore the green bit. So going to be something like this. So your stop loss is up here. As each day goes, you're simply going to keep the stop loss outside of that 21 EMA. That's it. So it really depends. So even if it has a massive move down, so hopefully it has a massive move down, something like that. All you're going to do is just drag the stop. It won't let me. So let's just move the whole position. You're just going to keep on dragging the stop down so it's above that 8 EMA. Let's just say we got in here, just so we can keep track. But in accordance with O levels at the same time. So you zoom in and go right. So if you were to hold this right up against the line, you want to create that white triangle. Can you see?
Yep.
So this little triangle, I'm trying to color it in. That.
So you're going to move it per day then, if it
yeah,
goes
it's probably if you're doing this on the daily chart, to be more precise, you'll move it every 2 or 3 candles. So here, I've zoomed in enough. So here we go. The stop loss is, let's make it more precise. So it's above the 5.
You don't move it in terms of. Sorry, Simon. So you don't move it in terms of like the pip size. You're just moving it to what the candles are saying.
Yeah, no, to the EMA. So if you're doing the 8 EMA bounce, and you've said in your strategy selection that you're going to trail it based on the 21 EMA because you want to be super safe. All you're going to do is whenever the 8 EMA lets you move down to a new safety level, so let's say here you've now moved it down to above that 1.0200 level, you're just going to stay there until you're stopped out there. But let's say it then starts moving down again and the market is all the way down, you can then keep on trailing it down according to the 21 EMA. So
according to the 21, not the 8 EMA, but the 21.
Well, it's your call. So this is why you have to go through that Otter's EMIT. Remember when you're creating your strategy. So in a non-volatile trending market, so a steady trending market, you can trail it with the 8 EMA, but you'll see every asset is different. So in this asset, whether it's sand or whatever, you can see that the 8 EMA is not very well respected. However, the 21 EMA is nearly always respected. So so the strategy will be different per asset class. So here you can see that the 21 EMA is pretty much well respected. So in this case, if I was doing the 8 EMA bounce and trail, yeah, I mean, look at this. If you were to short somewhere up here, let's say you'd get in somewhere around here, and you kept your stop loss all the way outside the 21 EMA, you wouldn't have got stopped out until down here. It would have kept doing that move beautifully.
Okay.
Yeah. Same with this. Obviously, I was doing it quite rough, but once it's you definitely would have got stopped out here. But yeah.
So basically, pip size is irrelevant then when you're moving the stop slot when you're moving your stop.
Yeah.
It's all about just following that. Okay.
Yeah. So in this case, let's say here we've got a pullback. Let's say we short it here. You're going to put your stop loss, I don't know, here just to be safe, and then see what happens. See, now the EMA is moving down. Great, I can move my stop loss down to break even. And then there's no thinking involved really. When the market goes down and the EMA goes down safe enough, you can then just drag it down. So
nice one.
Next one, and then you stopped out here. So yeah, but it'll take a while to get into a good runner. But when you get in a good runner, it is beautiful. It does help you. It takes the guessing away from when to get it out.
Yeah.
But
nice one, Simon.